Okay, hello guys. Hope you can see me, you can hear me. As always, please confirm it in the chat because no one's here. Angel or Ken, they will come. Hello, Chaitanya. Hello, everyone. Clearly, perfect. Thank you for the confirmation. Ken is running a little bit late. He should be here in about 5-10 minutes at latest. He's already back from the holiday, so he's going to be joining us on the live stream. And Angel is already here. Let me invite him. Okay, perfect. Hello, Angel.
Hey, what's good, guys?
Hey, how are you doing?
I'm great.
Perfect. I was just saying that Ken is going to join us today as well. He's just
Oh,
running a
nice.
little bit late. He should be here in 5 minutes. So today we got a lot of what we can talk about from the previous week, also for the upcoming week. Let me prepare the chart. Let me prepare the news.
Of course.
And
How are you, Jake, by the way?
I'm sorry?
How are you?
Not bad, not bad. Didn't trade too much last week because of news. Didn't want to risk it, but only the Australian dollar, which I've mentioned yesterday. By the way, guys, those of you who did not who did not watch the yesterday's live stream, I recommend you to do so because I was talking to the chat about the strategy that I'm trading. We're also reviewing few traders. There was one particular trader who won the Christmas giveaway 5K account, and after 8 months he secured $250 payout. Talk to me about patience, right? So it was fun. I shared the custom indexes, shared the indicator that I'm using for round numbers and threes and eights. So I think I've delivered a little bit of value to that live stream. So you can always rewatch them on Neil Market's YouTube channel. Okay, let me open the chat on the right side so I know, guys, what are you messaging? Perfect. I've got that. Also the charts. Yeah. And we should be good to go. Let me also open Trading Economics if I'll be sharing any news. Okay, yeah, perfect. So just before the live stream, just closing the window, I can share with you guys. I was watching a video called Top 7 Wildest Live Trading Losses with Reactions. Basically, people who lost a lot made me think about the prop firm industry because there was one specific guy, he was trading on the live stream on options, and Chad recommended him to close the trade and then that the market supposed to be reversing. So he closed a profitable trade, which was short, then opened a buy based on the chat reaction and lost like $2,000. So thank goodness for prop firms because your losses are limited to the cost of the purchase of the account. Probably you can learn a lot from these videos. Yeah. Okay, so what strategy would you recommend for Euro USD in the current market structure? Yeah, let's open the charts. And let's take a look. Okay, share the chart. Share the screen, and it should be this one. Okay, let me know, guys, when you see my screen.
Yep.
You
Clear,
can see.
clear.
Perfect, thank you. So Euro USD right now on the very resistant. What's the level? 1.158, 1.16, which is kind of strong resistance, to be honest. And the same happening might be actually the correction, guys, here. I don't know how about what's going to happen with the euro. Basically, this candle is just the Friday NFPs, which went poorly for the US dollar. If the US dollar will continue perform well, because that was just the labor market data, quite important, but still labor market data. It doesn't change much on the FOMC upcoming decision, at least based on a Fed Watch tool. But if that's only a correction, I think I'm having any troubles. Yeah, Fibonacci retracement here. I think it's not a bad level at all because we are in the golden zone, which is 60. I'm going to turn off this indicator. We are on the 50% of Fibonacci. The golden zone is 61 to 50. At the same time, 1.16 is pretty strong resistance. So if we are going to bounce from here, I think it could be a good short. And the same is happening actually on GBP USD. We are also right now at the moment the price is also fighting a resistance of 1.33, and I was talking about yesterday. Today mentioned it on my story. I forgot to send the link to Kana. Let me just do that quickly so he can join in. Yeah, perfect. I'm using this indicator and look how beautiful market reacted to the level of 1.333. So I'm also watching not only round numbers, but also threes and eights. And sometimes market reacts just like this. Nevertheless, we didn't break above the 1.33 level. So might be actually the same happenings as on Euro USD. I don't know how about Ken, but as we are reversing, basically changing the structure, because from higher highs, we then broke, created a new lower low, lower high, and lower low. So if we are about to bounce, might be a good opportunity for shorts on GBP USD and Euro USD.
Now, those
Still
also
bearish
looks
on G.
really clean actually.
Yeah. The structure looks really good on both because that's on 4 hour time frame. That's a beautiful reversal. We did not create a new higher high. Instead, we create lower low, and right now we are just at that very strong resistance of 1.16. So if the market will create some sort of a bearish momentum towards the downside, I'll be very hesitant to take the shorts. Dixie is strong. It is.
Yeah.
Let me take a look. Oh, just okay. He's just waiting to join. Can I? Yeah, he's here. Perfect. Okay. Hello,
Hey
Ken.
guys.
How are you doing?
Yeah, good man. How are you?
Not bad. Not bad.
Good.
Rested from the holiday? All good?
Well, not really because
How so?
I was jet lagged the whole time. So when it was in the evening there, I was up till like 3, 4 a.m. almost every day. So
Oh,
yeah,
damn!
Whoa.
Snap.
yeah, serious jet lag, bro. But yeah, apart from that, it's a good trip anyway. It's a good trip. I was without my, like without all my children. So it was a freaking break. It was a break. So yeah, man, jet lag or not, it was a large mental break. Yeah.
Okay,
Yeah.
at least something.
Yeah, man. How
Yeah.
you guys been?
Yeah, not bad, not bad. There was a
Very
busy
nice.
week last week, as you probably know.
Right. Yeah.
So we've got a lot of to talk about.
100% we do. We do
Yeah.
indeed.
We missed you a lot on the streams last week.
Oh man, yeah, I missed being on them. Especially when things are going down like the way they were. I mean, it's just like, man, I need to be there. Need to be there. But yeah, man, it
Yeah.
was a very busy week.
Yeah, it was too many
mean-
news. Actually, the only pair I traded was the Australian dollar again. Just wanted to avoid it all with that many news, especially high important news. And the CPI in Australia went down more than expected. It was a great
Yep.
opportunity to find shorts on Australian dollar. And then yesterday I had one more stream just sharing the strategy with traders who were watching at the time and showing some EA traders, so successful traders. And today back into the market analysis.
Yes, my man. Awesome.
I was just checking on the Euro USD and GBP USD
Yep.
as we are kind of reversing. Basically now the structure, as I was saying, printing new lower lows. at this moment, we are aligning with the resistance of 1.16. At the same time, we are in the golden zone of Fibonacci, which is 50 to 61. So if we are about to bounce, it could be great opportunities to go for some shorts.
I'm 100% aligned with you there. I think this is going to roll over. I think both Euro, GU is going to roll over. I think we are that dollar pullback on Friday because of the non-farm payrolls.
Yeah.
I mean, that's not, I just don't see that as sustainable. I believe we're going to bounce and we're going to see that dip buying for the greenback this week. Like markets, obviously, it was a whole palaver with that that non-farm payrolls report, because obviously we had that sharp, the reason why, obviously, I'm sure you guys might have touched upon it, but if anyone doesn't know, I mean, the reason why dollar sold off so hard on Friday is because the previous was revised lower. But then on the weekend, late last week, we saw Trump sacking the person that orchestrates the leader of the BLS, the Bureau of Labor Statistics. So he sacked them, citing potential manipulation of the data, which obviously that's not completely unheard of, but this is Trump. So I sort of highly doubt that. We've seen numbers being revised aggressively lower before or to the upside. It happens, you know, but that was a bit of a strong move from Trump to go and sack them. And obviously he's done that because he's like, man, you've just forced the stock market to further come under pressure, you know, and well, it was coming under pressure, and Trump's a businessman at the end of the day. So yeah, he just wasn't happy, and it's not that, I don't think it's that person's fault. He's just looking for someone to blame, you know, because he's not happy the way the stocks, you know, he just wants stocks to be heading up, not down. Yeah. You know, we've obviously had this cooling period. So it's been really interesting anyways. There's a lot of interesting things going down right now.
Yeah.
I mean, yeah.
Do you want me to pass you the screen, or are you preparing? So should I keep going, or would you like to dive in?
Yeah, I'll dive in. I'll dive in now. Let me just pull up my screen here. We'll start off with the dollar. Okay. All right, let's pull this up. Share. Okay, guys.
An FP took the liquidity of the market. Just going to
entire screen. Here we go. Okay.
A lot of messages that I've missed.
All right, cool. You guys can see my screen, right?
Yes, we can.
Yes. Just quickly getting something up here as well that I want to talk about. Okay, guys. Yeah, let's start off with the dollar. So yeah, what I was talking about, for anyone that doesn't know, we'll just quickly just skim over it. Okay, so last Friday, that's world volatility. Do you know what? Let's go with Monday a minute. I just want to walk you through, because you guys know I like to paint the picture, and obviously I was away last week, so it's only right, it only makes sense to do so. So remember, obviously the dollar, if you ask me where we're going, I still believe we're going to be going to the upside. Dollar was obviously in this structure to the downside. You know, we were going over it for weeks. Lower highs, lower lows. We broke out. You see here, this week here, we broke out. Okay. As a reminder, for anyone who doesn't know, back then we had the US CPI data, right? Look, okay. US CPI was sticky. And I said back then that this inflation data that came out higher, because we have higher inflation, the FOMC cannot rush to cut rates. The markets want those cuts, but they can't rush because we've got higher inflation. And bear in mind, tariffs are still freaking ongoing. So inflation go higher, right? So I said, remember my wording back here, I said the rate cut bets have been nuked because inflation's higher. So I am not surprised. Fast forward to last Wednesday, FOMC rate decision. Powell pushed people back. He pushed expectations back. He's like, look, inflation's still too high. We still haven't had the full effects of tariffs yet. Tariffs are still ongoing. So businesses' prices are still likely to go up. Okay. So my point is, dollar had already staged the rebound, or the foundations for a structure breakout. Sorry, it's a bit messy here, but I'll walk you through it. So we had this big push to the upside. Obviously here we hadn't broken structure yet, right? Because we still got a potential lower high. But then we came down, we had a pullback, retest of, we retested this trend line essentially. Okay. But regardless of that trend line, we pulled back and we failed to print a lower low. After what could have been a lower high, we failed to print a lower low and we've bounced. And what we've done here, as you can see from my pretty drawings, is we've double bottomed 1, 2, and then this is the neckline, breakout, retest, and it's holding right now. Obviously, this bearish engulfing candlestick was on the back of this non-farm payrolls. And it's not on the fact that we had a slightly weaker jobs number there. It was on this because it was sharply revised over from 147K. You know, the labor market is still relatively good. Remember how big the United States is. An unemployment rate of 4.2% is still healthy. You know, average earnings, what people are getting paid is 0.3%. That's still higher. It jumped up from 0.2. So if people are getting paid more money, that's inflationary, right? So everything that I'm just saying here, I'm just building the case of why this dollar is likely to be bought, you know, this pullback. So when you look at it, if we just focus on technicals at the moment, we left this bullish wick, and I strongly believe we're going to go and fill and make a good attempt to fill in this week, right? We are pretty light in terms of dollar data. There isn't anything major. I think we have ISM services, right? We've got the weekly unemployment claims from the United States, which has been pretty bullish. We've had a look at that. We've had a great run of numbers. Okay, so unemployment claims are still low. So dollar, if you look at the rate cut pricing, there was a lot of volatility, but we are still expecting maybe 1.5 cuts this year, maybe 2. I mean, it's not going to be 2. It's probably going to be 1, given where inflation's at right now. So what does that mean for euro? That candlestick looks nasty. You know, it's the flip side to the Dixie, and this is probably going to fill that wick to the downside. Where we're at right now, this is like massive. This is massive retest on sort of 16s, right? You can see it's almost like we could view this flip side to the Dixie as a bit of a double top. Our neckline here, which we're retesting this area here. On the 4 hour, this doesn't scream bullish at all. This looks like it's going to curl over and just come back down, in my opinion. Okay. On the 1 hour, yeah, just is a lot of consolidation right now. I think just the markets are a bit hungover from this move because this was crazy. Okay. Nice breakout and then now consolidating. But I'm not confident on this pushing out and doing this. I see it vulnerable and coming to the downside. I haven't pushed the button on any shorts yet. Okay. Today, I was watching for potential liquidity sweeps, take out the Asian range high, and then I was going to look at shorts, but we didn't see that. We've just been consolidating. So I wasn't confident and I didn't like this sort of price action. You know, volume's quite low as well. And you got to keep in mind, we're in the summer. So, you know, things are not as, I mean, things are still fast moving, but volumes are subsided a little bit, you know, because we're in this August month, everyone's on holiday, people looking after their kids, people going away. You know, so things are just not as liquid as they should be. And given that this is a light week, so there's not a lot to position for in terms of economic data. So put that all in a nutshell for you guys. Basically, I still believe that we're going to see some dollar upside this week. Okay. I strongly believe that. Yeah. So I haven't pulled the trigger yet. I will wait. I'm going to see what happens overnight in terms of the Asian range. Maybe I'll be pulling the trigger tomorrow, sort of European session, London session, US session. I don't know. We'll see. But what I want to see is, you know, sweep of Asian range high. And then I'm going to look at some potential shorts. I think this will roll over. Don't know what you got, your thoughts on that.
Yeah, basically what I also wanted to just add was that what I'm watching at the same time is market sentiment on a retail part, because this proved me right a lot of times. Whenever there's right now is about 60 to 65% of retail traders are selling. So as you were saying, looking for the liquidity sweep, I still believe there's going to be some sort of a bullish movement towards the upside just to take those retails, and then we're going to go down. So I would wait for it a little bit. I don't think, at least from my experience with the sentiment, I don't think we're going to go down at this moment. I think there still is going to be some sort of a bullish momentum, and then we drop.
Man, I totally agree with you, Jay. It's well said. And I think that, yeah, that in itself will present a nice potential opportunity. That's exactly what I'm looking for. So fingers crossed we can see that. and I think it'll be attractive. And we have to remember, look, guys, let's if we take it back to what maybe last year or the year before, 2024, 2023, what I was trading largely was divergences where we've had so much volatility and so much going on in the markets so far this year. But I love trading divergences. And now we have a divergence, okay? We have an opportunity for a divergence and for that trade to pick up momentum. What does Ken mean by that? I mean, look, the ECB, right? ECB have been great. I've been a massive Euro bull in the past, obviously, well, for a lot of this year so far. But the ECB have been cutting rates, right? The US, they haven't cut for a while and they're still on pause, and they're probably still going to be on pause until maybe November. So that's creating a divergence. Yields, rates are remaining higher in the States. Rates are coming down in Europe. Okay. And one thing that I missed off there, by the way, you know, when I was just babbling on, we had the trade deal with US and EU, and that trade deal was seen as a bit more favorable for the United States. You know, they seem to have got the upper hand there. Trump always seems to get what he wants most of the time. So, my point is there could be some negative impacts of those tariffs on European. I mean, we've already had some warnings from some ECB officials noting that potentially we can have a slowdown in terms of growth as a result of this trade agreement. So, you know, I think this is also a factor to play where we could have that divergence, monetary policy divergence, even potential flows coming back into the dollar over euro, you know. So yeah, it's interesting times. We're definitely at a turning point. I know a number of people, and don't get me wrong, like I'm not gonna excuse me, I'm not gonna lie to you guys. I was saying about potential for 119, you know, maybe 120, but things change. Macros change. There's no such thing as just one direction, you know, and this is why we have to understand what's happening in the markets. We can't just be like, yeah, euro is going to be buys forever. No, things happen. So I think we're coming down again. We're coming down.
At the same time, the inflation is as ECB projected. Last week we printed 2%, if I'm not mistaken, what was expected. So I think there's still going to be signals for ECB. We're heading right direction, and the speculations for continuing once the trade war is settled, then there's going to be another hit for euro, which is the possibility of continuing in the rate cuts. So yeah, I'm totally on you with that.
Definitely, yeah, Jay, that's also a good point, man. Inflation came down again, did it? European inflation.
Was I'm just
2%,
and the flash was at 2%. And even though the consensus was 1.9, but we are still at 2% on the flash. So I think when's the next inflation print? I think next week or the week after. But I think there are no signals that inflation should tick up, at least not on retail sales. On the consumer part, consumer spending, there's not any signal that would say that inflation should go up. So I think that would be another signal for, you know, big players speculating whenever ECB is going to deliver another rate cut to ease up a little bit.
Definitely. Yes, that's euro. I think you know, there's no reason as to why next week we can't be back at sub 114, take out these lows of last week. I think that's a sort of quite highly probable in my opinion, and that could be a nice sort of 200 pip drop there for euro. G is obviously a big talking point this week. Obviously, it's Bank of England rate decision week. So let's quickly pull that up on Thursday. Okay, Thursday. Now, the interesting thing is, look, guys, this is priced in. We're largely expecting them to cut rates by 25 basis points. So it's not necessarily that we're going to see pound weakness on the actual cut. Okay, this is very important. The votes. So how many dissenters are we getting? So 8 members are calling for that cut. No, it's expected that 8 members are calling for a cut. There's going to be potentially 1 dissenter. So if we see potentially more dissenters, right, then it would be less dovish, right? If we've got more members that want to keep rates unchanged as opposed to cutting, that'll be GBP positive. So if you see 7.2, for example, or 6.3, expect GBP strength to bounce back versus some of its peers, right? The dollar maybe be careful with because of this this dollar rebound, but pick your pairs wisely. Look at maybe GBP CAD or GP Aussie, whatever the case may be. But if this comes out unanimous, where all 9 members are calling for that rate cut, which I think is unlikely, right? And I'll talk about why in a moment, then the pound would get hit quite hard. Okay, why I say it's unlikely is because the UK, right, still has sticky inflation. Look at it. It's like 3.4% annualized, 3.6, excuse me, 3.4% previously. That's high. So if inflation's high and these guys are starting to cut rates in a high inflation environment, there is a very, very high risk, I believe, that inflation creeps up even more. But these guys it's a tricky one when you're a central bank, because in the UK, look at this, and this is one of the key reasons the Bank of England doing it. Look at the growth in the country, in the economy is bad. Last couple of readings have been bad. So for anyone that doesn't know, when we have low growth, especially contracting growth, but high prices, imagine what that's doing for the economy and what that's doing for a consumer, right? This is why the UK has a cost of living crisis, okay? Because people's affordability is diminishing. Their ability to afford basic goods in this country, and it's supposed to be obviously a major economy. People are struggling. Regular families, I'm talking, are struggling. So anyway, this is why the Bank of England are trying to take a step, and it's a tricky one. They're going to try and take a step to reduce costs, okay, bring down interest. But there's a risk, as human beings, when people's costs go down, right? And keep in mind, most people have debt. They have mortgages, they have loans, they have credit cards, they have loans on their freaking cars. But a lot of humans, general humans, are stupid. It's because they'll be like, oh yeah, my interest has gone down. I'm paying less interest. Let me go out and spend some more money. And then if they go out and spend more money, freaking prices go up. So it's a very, very delicate situation right now. All right, which is probably why GBP is vulnerable in comparison to a lot of its other peers, where we have this stagflation, similar to Canada. Canada is the same sort of situation. They have low growth, high prices. So yeah, anyway, rant over, onto the point. What's happening here with GU? Let me just sort of tie this up a minute. I was just looking at some scenarios on Sunday, but let me just tie this up. So structurally, it's obviously bearish right now. It was very clean last week. If you look on the lower time frame, guys, we'll hear lower high, lower low, lower high, lower low. It's really clean. Consolidation, breakout to the downside. Okay, now if we look at the engine, okay, the engine's a 4-hour for me. As a swing trader, predominantly swing trader, the 4-hour is my engine. It's my heartbeat for swing decisions. And right now, if we look at this together, guys, you can see obviously the lower highs and lower lows. Bam, 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 bam. And obviously still, this is obviously a potential lower high, right? And then we've got room to go and print a lower low. Okay, I like the idea of this downside, similar to what we just mentioned there with Euro. On the weekly, we've got this wick to fill. Okay, very bearish candlestick, and structure is intact there. I can't see this. I can't see this upside scenario playing out. So I'm very much leaning towards a downside. I'm looking for a Bank of England statement that's dovish. They're going to revise their growth forecast lower, see lower growth, and potentially they do see they've already warned us about a worsening in the labor market. They're seeing labor market worsening. So yeah, I expect pound downside. Okay, GP downside. What are your thoughts?
Yeah, the same. I can share.
That chart looks
charts,
pretty
but
much
Yeah,
the same as Jake earlier
Yeah.
before you joined.
Oh, okay.
I can share charts quickly, but I'm totally with you on dovish Bank of England, because, as you said, the growth is very important for them. At the same time, they closed the best deal probably among most of the countries with the US regarding the trade war. So they're good on that front. So I think they are going to somehow calm UK citizens with some sort of a dovish tone that probably once they see at least inflation take a little bit lower, they are going to deliver the rate cut. What was the? Let me just check briefly. What was the vote last time? 6 out of 9 were still voting for keeping rates unchanged. So yeah, I think it's going to be pretty much the same. And to take a look into charts for probably those who haven't seen, where is the screen? Share, and at probably the same time with euro, I'm waiting. As I said, the euro, I'm waiting for some sort of a spike toward the upside. So where's the brush? Should be, yeah, here. So I will be probably waiting for the spike towards, what is it? 1.163 to 1.165. This would be a great level for me to enter the short, especially if we see some sort of a candlestick pattern or formation, which is a big shadow above the candle. So then I'll be looking for short back towards the 1.14. And with the GU, we pretty much already touched the level which I think is important for me, the 1.333. So already I'll be looking for bearish momentum, and if so, I wouldn't be against just taking the shorts at least towards back, creating new lower low at 1.315. Yeah, maybe even lower than that. Depends if we break this zone. If I zoom out, it should be a support from previous. Yeah, you've got the price reaction a few times here, so it's not as strong support as probably the 1.33 resistance. But once we break, we pretty much open all the way towards 1.3 level, which is right now way far from it. It's about 300 pips. But if the US dollar will remain pretty hawkish on their monetary policy, at least FOMC, and the pound dovish or Bank of England dovish, then I don't see a reason why not. So yeah, that's as for EU and GU. Also, I don't know if you want to talk about the Australian dollar, but I would like to briefly just take a look at it, because we were talking about it last week, especially after the CPI. I'm still, guys, bearish on Australian dollar. Nothing changes for me. This is 4-hour chart. Where was the Wednesday's inflation print? Was it here? Yeah, we had bullish momentum since then. This is the Wednesday, the print of lower inflation. So I'm going to just repeat myself. What I'm expecting is for Bullocks or any other board member of the Reserve Bank of Australia to finally deliver the dovish statement. I think it's going to happen. The odds are on our side. So when that happens, this is Australian dollar index, I think will be getting a lot of bearish momentum. And the only pair that I'm looking for basically is still the Australian Swiss franc, which I said I will be selling last week. Let me just get rid of that. And probably the Ken's favorite. We've got some sort of a channel in here. So I think we will be breaking down. I can see Australian Swiss franc aiming for 0.516, even lower than that, creating lows from this point. So I don't know. We can basically also sell Australian dollar and US dollar as we just bouncing from the resistance. What's the resistance? I think it's 65, open 65 to 0.648, which is again 8 level. So I think if we are bouncing right here, I strongly believe so, we can get back below, or at least towards the 0.64. So yeah, for me, Australian dollar is still bearish.
Agreed, 100%. Agreed. I think this is a good time, to be honest. I was just, just quickly, I was just going to say that I think this is a great time because look, RBA have been lagging behind in terms of rate cuts and dovishness in comparison to other major central banks. So, there's a lot of room for catch up, for AUD to lose some ground versus some of its peers. AUD, USD, AUD, Swissy, 100% in line with those shorts.
Yeah, finally some opportunities. I'll be trading something else than Euro Australian dollar. So might be really good. I'm looking at gold. We've got a lot of bullish momentum, but that's just from the NFP data. What are your thoughts, Ken, on the gold, by the way?
Yeah, gold. I'm bullish. I'm bullish gold. Obviously, it's been a range for what, since mid-April. We've been stuck in a range for gold.
Yeah,
but
true.
I'm definitely bullish. It's just a matter of time of breakout. Really, there's still, on a fundamental level, there's still a lot of uncertainty. We've still got tariffs. We're still going to be talking about tariffs for the rest of 2025. There's still a lot of physical buying with gold, and gold is obviously a hedge against inflation. We still have freaking inflation concerns in major economies such as UK, US, Canada.
Sure.
So I expect this to continue to push the upside, and I am, it's just a case of range trading a bit at the moment. But I wanted to see a pullback. So there was a structure on the 4 hour where we were last week from 23rd of July up to the 30th of July, from Tuesday to Wednesday. We were printing lower highs, lower lows. And then we double bottomed. We bottomed out for gold, and we smashed it to the upside, obviously on the NFP. But I was looking for a pullback to a previous lower high area, the 30th of July highs. I was looking for a pullback there for some dip buying, basically.
Yeah. I think we can get some sort of a pullback now as we're in the middle of that very zone that you've mentioned. Market reacted here a lot of times. So I think if we get a little bit of a correction, get lost always in the trading, a little bit of correction, not that far, but somewhere here, then we can probably continue back towards the 3.44 level.
Yeah, definitely. I think we're going to see, we should see 3.4 today. Sorry, not today, this week. But I mean, all-time high area, back into that all-time high area, 34.30 and towards 34.50 this week. I think that could be seen, and obviously people always get confused. And because I remember someone dropped it in the chat last time and they're like, well, if dollar's going up, gold should be going down. No, it's not necessarily, guys, just to make that very, very clear. Okay, gold and dollar can both rise together. Okay, even though that gold is dollar denominated, remember gold is a completely different asset. It's a hedge. It's a hedge against risk. It's a hedge against uncertainty. It's a hedge against inflation. So people can continue to buy gold, and if dollar strengthens for its own reasons, dollar can strengthen for its own reasons. There's no reason as to why they can't move in tandem in the same direction. So yeah,
that's true. I would love to buy on that 3.34 level if that happens. I don't know if we get there, but also we were talking about a lot about the fair value gaps, which is this big bullish candle. At the same time, it feels right. Just the zone around the 3.34 to be the ideal for buying. Yeah. Okay. Do we have any other markets that we want to discuss?
Yeah, if you don't mind.
Yeah, sure. So I'll stop sharing. It's again yours.
Sorry, I'm just going to round off on. Going to talk about JPY pairs quickly. So, okay, guys. So obviously yen's a big one because last week we also had the BOJ. So what was it, last Tuesday? No, it was on Tuesday. Has Ken been on another planet? We did have BOJ last week. Okay, here it is. First day. Just making sure. I've been so confused. I've been in another dimension with all this being freaking.
It went not really well because Japanese yen got too much bearish momentum, but then on Friday just recovered and was the strongest currency.
Oh yeah. I mean, it loved that. That non-farm payrolls reading.
Yeah.
Yeah, guys, just a quick couple of things. So BOJ, this rate decision here was interesting. Okay. The reason being is when you look at some of the comments from Urida, Japanese governor, the BOJ governor, excuse me, he was definitely, when you read between the lines, some of these comments, he's definitely heading towards rate hikes. The reason I say that is because he said, look, one key thing is economic nosedive from tariffs now seems fairly unlikely. So they were worried before. One of the reasons why they're like, you know, we're not hiking anytime soon because there's uncertainty with tariffs. So now, because obviously we've had Japan, US have this sort of agreement, which is okay. He doesn't seem too much concern. He doesn't have too much concern about the economic outlook for Japan there, which is good. So yeah, he said the tail risk of sharp slowdown in the economy are receding. So when you read between the lines of this commentary, before he was worried, but now he's not so worried. So he's not going to say, yeah, guys, I'm hiking this year. No, he has to communicate things. And in this language here, for me, we're getting closer towards rate hikes. And one important thing here as well is, look, let me show you. What did he say? He said something about wages down here. He said, expect positive real wage growth momentum towards the end of the year. Now, this is very, very important, guys, because if wages are going up, remember, that's good for, well, it's not good, but it's inflationary. And the BOJ are only going to hike rates if inflation remains, you know, in their direction higher. Okay, they don't want to be hiking rates if inflation's coming down. You know the reason why. So that's important. And then look, one last thing here. Japan's labor ministry, the council, eyes about a 6% hike nationwide in full year 2025 average minimum wages, the biggest rise ever. That's according to Japanese news, Kyodo News. So you see, this is attention to details, right? So the labor ministry are expecting hikes nationwide. The BOJ will want to hike rates as long as wages are going up. So this is important, right? See, a lot of these details people don't even look. General retail guys don't even look at it, but I look at it. So what does that mean for yen? I think at some point, you know how yen was just getting screwed in the back doors. Now there is a chance that we see a pickup of yen flows as markets start to reprice, because we're pushing rate hikes. Excuse me, I'm so used to saying cuts. We're pushing rate hikes all the way to 2026. We're talking about rate hikes now, potentially in 2025, could come maybe October, before the end of the year. So there's a chance here for JPY to regather some momentum. And, you know, call me a basic BITCH, but I look at this as a potential head and shoulders here. You know, I look at this as a potential head and shoulders for UJ, right? Despite, I don't care what dollar's doing. I don't care how strong dollar is. That's fine. Dollar can do what he wants to do. But there is a chance for yen to really pick up some momentum. So this pullback that we're having right now, obviously we've been printing higher highs, higher lows, but I see this as vulnerable, and I think we're going to come back towards 141. I'm really, really interested in that. Okay. I'll be interested when we come back down here, and I will look at shorts. EJ, I saw someone dropped it in the chat. EJ's topped out. EJ's done. Okay. This is coming back. It's coming back. So, you know, we are at a top. We failed to break 174. We failed to break down these highs. We're topping out here. On a weekly, look at that. Bearish engulfing. This is done. This is coming all the way back down. We've had a structure break. We're printing high highs, high lows. Structure's broken. It's finished. You know, and now we're obviously grinding down this sort of 70-50 area. This is just free fall, in my opinion. And there was this range. If you look all the way back here, there was this range that EJ was in, right? We're going to come down for a retest of this range, in my opinion. So I think keep an eye out for a nice structure being formed. Obviously, it's a little bit crazy at the moment, but we should start getting a nice clean structure to the downside with lower highs, lower lows, you know, somewhat replicating these moves here. Maybe not as easy because this was very sharp back here, but I want to start to see some sort of nice bearish structure forming here for EJ. A lot of the yen pairs, you know, GJ as well, finished. It's coming all the way back down. Okay, done and dusted. Big breakout here. I know my chart is horrendous. I need to really clean myself up, conduct some hygiene. I've got BO. My charts have got a bit body odor. So anyway, so we've come up to this massive area of resistance. Look at this failure to break down 200. We couldn't break it down. You know, it's a big region. So this is coming down as well. So structure breakout, Bank of England cutting rates, BOJ moving closer towards rate hikes again. So yeah, look, I'll leave it to you guys. I'm conscious I'm talking a lot here, but I am in favor of yen flows. Okay, picking up some pace.
I kind of see some confluence with the Japanese yen, USD Japanese yen, and the level 150, because I'm watching it for quite a long time. I think it was 5-6 years ago when USD Japanese yen hit the 150 level after a long time, and the BOG intervened immediately. Then it happened again. So in the period of past 6 years, I think it happened 3 times when the USD Japanese yen hit the level 150 and then bank intervened. So I think they have some sketchy play at the Bank of Japan, especially on that very level 150. Usually what happens is that then the Japanese yen gets stronger. So I think that might be the case, and we might be heading south in this case, as Ken suggested, which I'm totally with you on this one.
Yeah, man. Definitely, Jake. Someone mentioned Aussie yen as well. Yeah, like obviously Jake just covered the bearishness with Aussie in general. So this has potential great opportunities for shorts. Okay.
Yeah.
Look, we've similar to EJ and GJ, nice bearish engulfing there on a weekly. We've broken structure. Okay. We've broken structure there. We topped out, as you can see, and now heading to the downside. I think this is, should be quite clean south. Again, just the trend is your friend. We've recently just, obviously, as I say, we peaked here 3 times. Look, 1, 2, 3 peaks. It's almost like a bit of a triple top. Neckline taken out. So there would have been, without a shadow of doubt, you see all here where people are buying, where there would have been a lot of stops here for longs. Okay. And this is a classic stop trigger to downside. I mean, don't get me wrong, that is NFP, but it was exacerbated by the fact that there would have been a lot of stops on buys here. Okay. So now what we have is a clean structure forming. Okay. Yeah. Lower high, lower low. We're in the process of, don't just jump in and be like, yeah, I'm just going to jump in these shorts. Just wait, be patient, wait for the pullback and carry on. Not to say that this is going to be as clean as that, but wait, don't start jumping in while we're in the process of printing a lower low. Wait for that lower high so that you have a more opportunity potentially of that trade going in your favor. So yeah, I like Aussie yen shorts as well. Someone just mentioned it in chat.
Yeah, I like a lot of the market. Actually, looking at the Aussie and Japanese yen at the same time, a lot of markets these days, that's why I think this week is going to be very important, are just reversing, creating new structure, creating new lower lows. So as well as Euro USD, GBP USD, the same goes with Australian Japanese yen, just reversing the trend. So I think it could be a very important week. If we actually confirm the reversals on those, we can enter some beautiful trades that can last longer than just a few days.
Definitely.
Yeah. Let me take a look into chat if there's something we've
missed.
Of
course. Yeah.
Okay. Yeah, a lot of people were asking about the sessions. Me personally, I don't care that much about the sessions, and I've talked about it yesterday that I usually trade the session after the important news release. So I don't mind entering London or the New York session. The only sessions that I don't trade is Asian one and Sydney, right? So yeah.
Yeah,
But
that's the same as me,
you
actually.
are entering, right? You focusing on London session, if I'm not mistaken.
Yeah, predominantly I'm entering London session, but then also New York, 2:00 London time. So yeah, between London and New York, I'm looking for entries. My intraday, I get a lot of intraday trades, London. Okay, so once we get that liquidity sweep during the London session of the Asian range, high or low, depending on where we are. So I find a lot of entries there, early hours London time, but then sometimes I get the opportunity of liquidity sweep happen in New York as well. Just depends what markets are saying. But yeah. Someone actually dropped it in the chat because a little while ago you were talking about obviously taking out liquidity, and someone said, oh, obviously they know that that's sort of one of how one of the approaches I like to take, and they're saying, Jake, you trade, or someone was saying you trade the sessions now. You trade liquidity. Do you trade liquidity, Drake? Do you take that into consideration?
Well, not really, basically. Now as I'm getting to the intraday trading, I'm trying to, because if I'm about to open and close the trade in one day, I need the liquidity, I need the volatility. So I'm looking for new London session. But with my swing trading strategy, I don't actually mind what's the time, what's the session. I'll just go in as the price reaches the level that I need for me to enter the market. But I think that for a lot of people, it's a big deal to find the best session where to enter, like to look for the patterns in that specific session or the session before. Yeah, I get it. I didn't get there yet with my intraday strategy, but I'm most definitely taking that into the consideration right now.
Yeah, definitely.
I
Just a
will, I
couple
will
of things.
say it's
Oh, go
like
ahead, Joe.
more like, and which session actually works better for you. I think that's really important, like to gather all the data from your previous trades and see which session actually is like better for you, you know?
Yeah. Well, I can find out. I can take a look at last 10, 20 trades that I took. I don't recall the sessions that I entered the market, but I'll have
Yeah,
it ready for you till the Wednesday's live stream session. I'll
that'd be
prepare those
interesting.
trades, share the screen, and we can take a look together. What are the sessions? I think most of them are going to be actually New York session, because what I recall a lot of times I was entering the
Yorker.
market late New York session. So yeah, we'll see. We'll see.
Yeah, man. Someone, yes, everyone, people are waiting for Angel, by the way. But I was just going to quickly say something.
Sure.
Someone said obviously about mastering patience with you guys. Patience is obviously, as you guys know, is a big part of trading without a shadow of doubt. And you can see with Jake, right? Jake's is naturally calm, cool, collected. For me, like naturally as a person, I have not been that guy. I've been very erratic, sort of through my younger days. I've had to do a lot of things to put myself in check, just from calm, that was quite crazy. And this is why you have to understand yourself as a person, as a character, and you have to improve on yourself first before trading. Okay, don't just try and jump into trading if you haven't sort of got your shit together. Not in all aspects of life. I just mean with you, how you approach yourself, understanding yourself is very important. But you can see Jake naturally as a person, he's quite calm, collected, but that doesn't come to everybody. Everybody's different. Yeah. And it takes some time. It takes some time and practice working on yourself.
Thanks for that. I appreciate it. I mean, the reaction sometimes is like fire and water, but I think that there are advantages in both. Sometimes you need that drive, but yeah, I definitely agree that patience is one of the most important characteristics that you need to have as a trader. I mean, I wanted to talk about patience today on a different video because yesterday we were actually reviewing a trader who spent 8 months trading a free 5K giveaway, and he finally got the $250 payout. And also tomorrow on Wednesday, we are about to share on YouTube an account review of a trader who purchased an 80 Markets account in 2023. And last week, he got the first payout. So 2 years took him to pass the evaluation and to get to simulated funded stage and then to secure the payout at the 8. So sometimes, but yeah, patient is probably like one of the key characteristics also. So very true.
Wow. Love the persistence though.
yeah. It's going to be a very interesting episode. 2 years taken to get the payout.
Nice.
Yeah. Okay. So if you want to, I think people were asking about Angel. So
yeah,
you can go ahead, share some indexes because I'm interested in those as well. Never trade one, but also need to get into it as a lot of yield markets traders are focused on indexes.
Yeah, of course. Let me share this window. Let me know if you guys can see the screen.
Yes, we can.
Yeah, perfect. So pretty much looks like we can finally see some retracement on the higher time frame. And of course, the trend is your friend, but you always got to pay attention to what the higher time frame is doing. So we finally see some displacement lower, and we might trade now into this gap on the weekly time frame. So I will want to see this week, this weekly candle trading higher the first days and then closing lower, maybe filling this gap and getting back higher again. That's pretty much the higher time frame hindsight that I have on the Nasdaq. If you look at this displacement lower, when we use a Fibonacci here, we pretty much have the areas where we want to look for shorts. Of course, always keeping in mind that we are bullish, but we might see a retracement to the 50% or the 70% here on the Nasdaq. So we might trade higher. We want to see what happens here. We have news tomorrow, so it's going to be interesting to see if we see lower prices to rebalance on the higher time frame perspective to, of course, continue higher. So I will be looking for this 70% retracement, 50%, pretty much tomorrow. Yeah, it's going to be really important. I think it's the only day that's actually going to release news for the week, if I'm not mistaken. So yeah, that's pretty much for Nasdaq. We have this gap here on the 4-hour, which is interesting. This gap here. Why this gap and not this one and this one? Because if you use the Fibonacci, you gotta trade what makes sense, and of course, you gotta trade after the 50% retracement. So yeah, I was looking for shells on this gap here on the Nasdaq. It's pretty much the same for SP 500. We have a gap here. We have an obvious displacement lower on this low here. And it's pretty much retracement to continue. And then, because we have these lows here, really interesting. So we might sweep these lows and continue higher from there. So pretty much it's going to be, I'll be waiting for something like this on the indices and then continue higher. So if you guys are looking
shorter time frames, you are watching for shorts, and from the distance, you're still about to buy then, right?
Yeah, of course. I mean, you can buy, of course, but since you're doing intraday, well, at least for me, I'm doing the intraday. I have to wait to what's going to happen with the sessions, because if, let's say, tomorrow Asia trades higher, and then London opens and sweep Asia, and we trade into this gap, and then we break the structure, I'll be looking for New York to push lower, right? We have this scan set up here, which is going to be interesting when it happens, of course, with context. So yeah, you can take longs, of course, if you see the opportunity. Of course, let's say tomorrow we are not into these levels, and then Asia trades lower and London sweeps the low, then of course you can look for longs to get higher into this leg. So yeah, it's pretty much how the day is going to be for tomorrow, before and after the news, right?
Okay.
So yeah, that's pretty much what I'm seeing for Nasdaq and SP 500. For the US30, still pretty much the same. We swept this low here. We have this displacement lower. If we also have this gap here on the daily time frame, right? So you want to see what's going to happen on this gap on US30. So we might take liquidity from this high, and then we see some reaction from here, maybe to mitigate this range, and then we can continue with the uptrend. All right, so it will be something like, so this is what I'm seeing right now with the indices. So yeah, that's pretty much it.
Interesting. Do you guys have any questions for Angel regarding the indexes? I think they were saying the fair value gap. They were discussing some rules in the chat, and
Let's see if I can check the chat as well.
Why this level Fibbo? You're using Fibonacci just like when the market is getting back to the trend, right? Like usually.
Yeah, I mean,
as
you can
Fibbo is
use
used, or
you can use the normal Fibonacci. I like the 70% level because you might see some retracement from the 60% level that actually barely touches the 70%. It's like, you know, the optimal trade entry area. But yeah, you can just use the 60% over the 50% and have some sort of guide from there, because it's pretty much just, you know, buying higher is hard, right? So yeah.
Okay. Also, there was a question. Probably, I'll speak to Ken about it once we reach a certain number of probably people watching us. But they were asking you for already a few times if you can then sometimes dedicate 15-20 minutes to explain in a nutshell. Doesn't have to be like details of your strategy. Like what are you if you fundamental trader, which you are, what is that you watch during the week, then also what levels how do you highlight the levels and so on. Because yesterday I did some sort of a breakdown of my strategy in nutshell, so probably they are also asking for yours. So we can then probably something like that arrange it once we have more people on.
Definitely.
Oh, yeah.
Definitely. 100%. Wait, did you say me or Angel? Sorry.
Yeah, you can.
Okay.
I think Angel already explained it on the first live stream, so you are
Yep.
the last one who yet not explained his strategy. I think people are very hungry for it. So yeah, once we see the numbers,
Yeah, man, I'll give details on my day trading strategy. So my which is sort of my 15-30 minute, and then I will do my swing trading strategy as well. I can just sort of cover both of them. That's fine.
Yeah, we'll see how many people will get in. It's going to be the best for last. So Ken's one strategy. I don't have any intraday strategy that I could give you guys right now, which is not fortunate. But yeah, I'll work on it probably in upcoming weeks, months. I'll find something that I can share with you. I think we're good to go for today. Or anything else that would like to add for the market? Ken, Angel, you good?
Yeah,
that's good.
Okay.
Nothing else on my side. All bless. Thank you.
Perfect.
Cheers,
then thank you so much for both of you for sharing your analysis. Happy to have you back, Ken. I think a lot of people were missing you. Even on the Wednesday's live stream session, when I was showing the chart, showing the analysis, a lot of people were asking where the Ken is back sharing his charts. So they were missing your channels most likely. So yeah, it's a pleasure to have you back. And guys, on a Wednesday, as usually, we are going to have another session.
Definitely invite your friends, guys. Invite your friends. I know everyone in here. I know you've all part of trading communities. Invite your friends to the streams. There's plenty of value that we're all giving here.
Yeah, the more we grow, the more we can offer all as well. So thank you so much. Also, thank you guys who are watching us. Also, the giveaway, as usually on Monday, is going to be in the comments of the recording on the YouTube channel. So then after, 30 minutes, 1 hour, take a look into the comments. And if your name is there, to send me a screenshot of your YouTube profile, and I'll provide you with the 48-hour challenge. So yeah, thanks a lot, guys. And I'll see you on Wednesday. Till then, best of luck.
See you guys.
Take care, guys.